understanding, you know, the way in which the markets move, okay? So we're going to be looking at how we can identify our indications, where we see corrections, where we see continuations. We're going to be looking at a kind of data-driven reviewing our previous, what the market's previously done and why. And we're going to look at it from that perspective. Now, understand that when we look at things from a lot higher time frame, this is a real overview guide to what's happening. All right, let me say that again. It's a real overview guide of what the market's been doing. It has no direct bearing on our entry into that market. All right, it has a general kind of energy, a general kind of bearing upon what's going on in the market, but it doesn't have it's not a direct bearing about what's going on. Let me see something real quickly. Just check on something real quick. Let me just check on something real quickly. Let's get rid of this. Just seeing something. Why don't I like that? What's going on here? Why did these two look different? Too different. You see something over here. So I don't normally use FXCM candles, FXCM broker, and I'm looking over here. We've got this going on. But over here, we've got something else going on. When did this start? This is going back to 1971. Okay, that's why. That is why. All right. Because FXCM, let me see, 2007. Okay, FXCM are giving us more candles. It's interesting. Okay. FXCM are giving us more data going back. All right. So you see, when you see these little things, you got to investigate, you got to research, you got to find out what's going on. All right. FXCM are giving us more candles. They're giving us all this information going back here. All right. Whereas our Oanda is only giving us information on TradingView from about this line here. Okay. Which is very interesting. Okay. Which is very, 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 very interesting. It's quite interesting. All right. Let me, I'm going to fade out all of these lines. These lines are too prominent. I was just really checking to see why that was looking like that. And like I said, there's nothing wrong with you being able to analyze and look and make these assessments. And it's actually good to see. Straight away, my eyes picked it up. My eyes picked up like, what is going on? There's something looks strange here. Something looks different from what I'm accustomed to. That's good. It shows obviously that I'm at least on the pulse of what I've been looking at, and I can see when things change. So let's have a look. Now I've drawn a line in here in regards to this top end range, how this market's been trading down. All right, I just faded it out a little piece. And ultimately we can see that this market pushed up structurally. I'm going to draw a path. The reason why I do this is beginner's level, but it gives you that clarity of seeing like how your eye, seeing how these markets are moving. All right. In this kind of energy. All right. Or, you know, if we want to go into all the smaller little retracements, we can do. All right. We can do the smaller energy, but we can see from here, in fact, let me even do that. We can see that this market within this much bigger structure, okay, there is smaller structure. I want to also show you right in here. Can you see this? So this would be internal structure within this bigger push. So if I make this a different color, like so, you can see that within that push, we've got this internal structure. Okay, so all of this energy here is trading within. Let me put some letters to it. Yeah. I'm going to put a letter in here, B. And I'm going to put a letter in here, C. All right. So we can see that this market at the moment, we are trading within B and C. That's where we are trading within. That's what the market currently, all this energy is within this point and this point. Now, on a smaller level, okay, now if we're looking at this market is ultimately making bullish structure. Okay, it's ultimately making bullish structure, making higher highs, higher lows, higher highs. This is a higher low. Now, even on the bigger Russian doll, this was the previous high up here. So this is the previous pitch, and we are playing within here. Okay. So what's my point? What am I trying to show? I'm trying to show this Russian doll, this, even though there you might see something going on in here, there's a bigger picture to it. So this bigger picture, this bigger path coming from, up into these levels are coming in here. Yeah. This is the bigger path. All right. So this here is allowed to come all the way up to these levels. All right. Obviously, we've seen it trading within a range, but it's allowed to come up to these levels. Once it doesn't break this level here, this would still be bearish structure. You see? So the point is we always have to remember this pitch that we're playing on. But this can confuse things and make things quite complex. Although my BNC wasn't anchored, or they were anchored, they didn't move around. So they're useless over here. Let me get rid of that. Get rid of that. Let me get rid of that. All right. So we need to be able to look at what the general consensus is, the energy of what's happening in the day. Okay. Because ultimately we are day traders. We want to know what's happening today. We want to be able to take advantage of that energy of what the market is doing today. Okay. Not what it's doing over the next however long, this week and that week, or whatever it may be. We want to know what the market's doing today. Like, what is the energy today? Okay. All right. So we're going to look at this chart, and we can see that the market has been bullish. Very, very, very bullish. All right. We can see that on a daily time frame. Yesterday was a bullish candle, a big green candle. Okay. And we're looking at, if we could sort of, could today be another big green candle, or is it going to be a red retracement candle? Because we are at the top of this range that we drew in here, which is essentially a little guide of how this market's been trading down. But that guide alone isn't enough for us to just hit the button. It is not enough. Okay. Now we can draw some additional trend lines in here to understand what this market's been doing. Have a look. It came down here and it broke the structure in here. And then it pushed back up in here with bullish energy, making higher highs, higher lows, higher highs, higher lows. Okay. So within this push here, we can see the market making higher highs, higher lows, higher highs, higher lows, higher highs. Went sideways a little bit here, pushed, grabbed the liquidity up here, and then decided to make its retracement. Pushing down here, breaking some structure. Boom, breaking some structure into here. And then once again, turned around, had this little wick here, boom, pushing, pushed all the way up, I broke structure, indications, corrections, continuations, and decided to continue pushing up. So we can see that even though ultimately we'd love to turn around and be selling this market from the top of this trend line here, the market's only giving bullish energy. It's only giving bullish energy. And at the moment, if I was to draw a box, it's trading within this high and this low. That's what the market's doing. It's trading within that high and that low. Now, is this going to come and break this structure over here and make another higher high on that larger, higher time frame? Well, based upon structure, based upon what this market has been doing, it could definitely make a higher high here. It could definitely take this liquidity from above here because it's been making higher highs, higher lows, higher highs, higher lows. It could be trying to push all the way back up to the top of this range and tap above here. Could do. I'm not trying to say it's impossible. It definitely could do. So we have to be able to read and react to what the market is currently doing. Okay, so let's have a look right now. I'm going to draw some more lines. Okay, these lines are definitely for your benefit. when I'm trading, I do not have to draw all of these lines in like so, because I can see them with my eye. I can see, I get that overall understanding of the market and can see what's going on. All right. So based upon these trend lines, we can see this market is trading within this range. This is the trend. Yeah, this is the trend that this market is trading within. Okay. And we've seen it come from this end, push all the way down to the bottom end in the discount. And then the market is now pushing back up here. Yeah, pushing back up into premium levels. All right, pushing back up into premium levels. In fact, tapped into a premium level over here. Okay, let's drop our time frame down to an hour and see what's happening in the hour. All right. In the hour, we can see this little range that the market's trading within. Now, why have I drawn that? Because I need to touch the last low before the highest point. That's how I've drawn it. Therefore, the market's in here, in this little here and here. Now, the issue is when we draw our lines is, has this wick here been the end of that bullish push, or does it want to push up some more? Look at this, or look at this range I've just drawn. Does the market actually want to push up some more up into these levels? We don't know, because these lines are just guides. So though they are guiding us and giving us some overview information, they're not the be all and end all. Now let's have a look at something else we want to put in here, because we want to understand these time-based. That's not that one. Oh, don't want that one. And I'm annoyed because I don't have the indicator here, but let me see. I do have it here. And let's go and grab it over here. Let's go and put it in. I'm hoping that I've saved my settings and I'm not going to have to redo all my settings. So that'd be annoying. And I've got the feeling that I have to redo my settings. It's strange. Maybe it's because I've used the other because I use FXCM. Maybe it's because I used FXCM. Don't know why all of the data's gone. All right, sorry for this. I'm gonna go back over here. I'm just gonna use it because that's what I can't be bothered to take the time of doing it right now. So let's go on over here, and this one here, I believe, should have no issues with that indicator. Just let me check. Let me check. All right, cool. That's how I want to see it. And I don't want to start taking up time trying to fix it right now. Don't know why it's the case. I don't normally use FXCM, as I mentioned. All right, so let's have a look at some time-based stuff that's going on. Right. Now, we understand that these markets like to trade towards liquidity. Okay. Now, liquidity is going to be the buzzword that we are going to be using. Liquidity, liquidity, liquidity. All right. Liquidity, liquidity, liquidity. Now, I believe, have a look. I drew this path in beforehand, that this market actually, even if it wants to go up, keep pushing up bullishly in this area, we can see on a smaller time frame that the market has got some other pulls on liquidity, which is this huge imbalance, which is the Asian session low. Now, Asian session, okay, kind of works as a framework for, what the market wants to do. And what I want to do is I want to start making it a little bit more restrictive in regards to how we trade. I don't want necessarily people just constantly trading all day long. I want it to be the case that we want to trade in high probability zones. Okay. Now, high probability zones meaning times when there's lots of volume in the market. All right, that's what I want to trade in. When there's lots of volume in the market, that's going to allow us to achieve our goals pretty quickly. Okay. Now, as you can see, I've drawn in these paths. Okay. And I'm actually, well, look, let's have a look first. Let's knuckle down. So you can see on a 15-minute time frame, we're dropping down to our 15-minute time frame. We can see this market. We had this huge push up here, which is CPI, which was exactly what we broke down the other yesterday of what the market would do. And we saw this market push up because news just propels the market to what it's going to do anyway, just faster. All right. But ultimately, once again, then this energy of this market, have a look, higher highs, higher lows, higher highs, is potentially, we're thinking to ourselves, we might be getting a higher low before this market, if it does want to push up higher. Yeah. But the whole point is this, is that we are still looking at how this market moves within waves, and we are still looking at the draws on liquidity. And I'm thinking to myself, based upon this Asian session, which is building up liquidity either side of this Asian session, that the market, i.e. London, has started now. Okay. London has started now. As you can see here, 7 o'clock, that this London session may want to run these Asian highs, which is where the liquidity is. Have a look at it, still going. Have a look at my path that I drew a long time ago before the session started. May want to run these highs and go and grab liquidity, okay? Because that liquidity may give it the fuel it needs for in intraday daily movements, okay? For it to go down and grab the other liquidity, okay, which may be at the bottom of this Asian session and in this imbalance, which is a huge other pool also, to then, if it wants to go and push up or do something else, okay? So when we was looking at these charts, we have to understand that, for example, have a look here now, in this energy here, if I drop down to my 1 minute time frame, just so that we can see it, I want to show you how this market moves. And we're seeing here, great, still pushing up, okay? Let me just do that. I'm actually in 4 figures in regards to that trade. And for me, I need to make sure I take profits. And how I take my profits is by either taking partials or moving my stop to key structural levels, okay? To key structural levels, okay? So at the end of the day here, I'm going to leave this in here like so, sorry. All right, so this market made a break of structure, okay? Over here, we can see this market made an push down. If I was to draw some lines in here like so, let's have a look. Well, let's just take the entry. This market was pushing down to the bottom of London session. All right. Now in here, I'm looking for a few things. Okay. Have a look. I'm looking, and this, if I was to draw some lines in here, I know I'm on a 1 minute time frame, but I want you to try and follow me. All right. Because it's easy for me to show you in a 1 minute time frame. Where this is touching is structure. This market came down here, went up here, went down here. This is the path. So this becomes a level of structure in here, even on the 1 minute time frame. And we can see how the market, watch, pushed past that structure in here, all right, with strength and speed, leaving imbalances. You see, leaving imbalances. And the candle that broke this structure was in here, created this imbalance in here. You see, it's created this imbalance that the market came and tapped into beautifully. Yeah. But we don't necessarily have to take this trade here. Okay. We can understand that this trade here, have a look, indicates over this structure, corrects, and then continues with a closing candle. Okay. And for all purposes, we could turn around and enter this trade like so, or with our stop below our lows. All right. So let's say we've taken this trade here after this market's come down here, tapped into a lovely imbalance, and then closed above. This is showing that buyers are coming in the market. Have a look. These wicks are coming down here and then getting pushed back all the way up here. This is again another sign. Let me show you something, guys. When you see wicks like this, long wicks with a small body near the top, that is a sign that buyers are in charge of the market, because the sellers pushed it down here and the buyers said no. The sellers pushed it down here and the buyers said no. This is showing us that the buyers are in control of the market. Yeah. Have a look how the market, every time this market's pushing up, it's we're seeing it pushing through these. Let me come out of here on a 5 minute time frame. We're seeing that above all of these levels here is liquidity. Liquidity. It's energy for this market to go and do what it wants to do because it's reaching towards that Asian high, which look, it's just reached now. It's just touched, it's just pushed above it. Okay. So at that point in time, I'm just squeezing up my stop some more. This liquidity above this Asian high has just been captured. Okay. It's just been captured here. And the question is this market going to continue pushing up into the draws on price? Have a look at the imbalance that's in here. All right. Now, what I've also identified in here is this indicator has shown us this previous New York high. You see? And if you think about what I was saying to you yesterday, that these different sessions are like different football teams, Spain, England, Netherlands, or France. Yeah. The reality is that these different sessions are always searching out the liquidity. They're always searching out the liquidity. So this is coming up here. It might be the case that London's feeling wicked and bad, and it not only wants to go and take out the Asian session, but it wants to go and take out the previous New York high liquidity also. So this GU may keep running and running and running all the way up into, because yes, we have a bigger time frame opinion, but we need to understand daily what the draws on price are, because we are taking trades as day traders. We're not taking trades as swing traders, worrying about necessarily what's happening in the next 6 months. We are taking trades as day traders. All right. So understanding this energy, being able to see that the market may flow into these areas is something that we have to be able to do. And it sounds like you're looking at yourself, I just don't get it. I can't understand it. But if we're looking at this market here and we're saying, look, that this market is trading within a range, right? We've seen this huge push up from here to here. Now, we're wondering when we see this little energy in here, this whole energy doesn't mean anything until we break this bigger structure. It doesn't mean that it's necessarily going to start busting all the way down here. And we don't know whether this high here is the highest point. We don't know whether it wants to come up here and actually tap higher than this level in here. So we have to read and react to what the market is doing. And what the market did here is, look, if we're looking at it on this 15-minute time frame for argument's sake, it hasn't broken 15-minute structure, which is down here. It didn't break this and then do this and start coming down. It's trading within this area here. Yeah. And if we're looking at the price action, of what's going on here, is the Asians. This is a big push that happened, New York's London session, New York session. All right. We've seen this Asian session here moving like so, but not breaking this structure. All right. So ultimately, this Asian session, look, have a look. This is a low. This is a high. This is a higher low. You see it? Within this Asian session, which started at the start of the day, Asian starts at 12 o'clock, we've seen a higher low. We've seen this market pushing up back up in here. We've seen a retracement back into here. And when London starts in here, we've seen the market push down in here and then start to break structure bullishly on a smaller time frame. Going for what? Potential liquidity, because we made a higher low. We're potentially thinking it's going to be a higher high. What kind of draws on price are a higher high? Can we see above? We can see the Asian session high. We can also see this imbalance that we're currently in right now. Yeah. And we can even see at a stretch, this New York high, that this market could easily come up here and wick up into this level. So therefore, this here, look, boom, boom, is a candlestick pattern at the moment. It's called a bullish flag pattern. How this market has made a big pole and then kind of come down in this level. Then potentially we see a push up here. This is a bullish candlestick pattern, you see? Because like I said, this here high, though it's close to this range here, we do not know whether or not it has finished its journey to our orange range. We don't know. We know that this is a premium. That's why the market sold off from here, but we don't know if it's finished getting to its actual point. So we have to look at what are the draws on price. The draws on price are imbalances, are liquidity, etc., etc. Have a look at this. What I've identified here. If I can zoom back, I think FXCM would have been better, giving me more data. Okay, we can see how this market pushed up here into these levels. On a smaller time frame, look, all of this area here is imbalance. Is area that needs to be filled. Yeah, and that's just me looking at it on a 1 hour time frame. All of this area is energy that the market could decide it wants to push up into here. All right. Wants to push up into here for the larger structure. So the point I'm trying to stress in today's session, so if it's a little bit bit disjointed. Okay, we actually had a push up into that imbalance. Okay. We had a push up into that imbalance already, I've just noticed. So let me get that. That's been filled. Okay. Is understanding that intraday, like what's happening in the day, is more important to us as day traders. You see it? And when we're seeing break of structure on a smaller time frame and the market making bullish energy, have a look over here, indicating, correcting, continuing, we start looking at the structure of the candles, at the structure of how the market's moving, and we could just see these wicks, this indication, correction, continuation, this way this market's breaking structure, the way this market is breaking levels like this, indicating above this structure, corrected and continuing. Yeah. The way this market's continuing to push. At the moment, we've got a huge push from here, breaking this structure. But look, now we've captured this Asian high. This was the Asian high over here. Now this market's captured this Asian high. It's a very high possibility that it's happy now. Look at this initial path that I drew. Obviously, I before it was like this, but either way, just pushing up here. It's very possible this market is happy now and wants to move towards the other place where the liquidity was. Okay. Now, we're not going to see an immediate reaction. And we wouldn't be able to get in here to see an immediate reaction. We have to see the market give us what we need, which is an indication, correction, and continuation. On a 1 minute time frame, we have no structure here to work off apart from all the way down here. So ultimately, we're going to wait. We're going to be patient. I'm going to hopefully, we're going to see this market do this. All the YouTube trade is going to hit the button for a sell. Then you're going to see the market push up again. Then you're going to see this market potentially break this structure. And then you're going to see it come back up in here. And then you're going to see this happen. Now, this is an indication, correction, continuation for us to get into a trade. It's an indication, correction, continuation for a trade. If you master this strategy, you will learn how to be able to get in here. When that market comes back in here and you see market structure in here, you see some wick action in here, you're able to get in your trade here, placing your stop above these highs, or if you're very aggressive, just in where there's going to be an imbalance. Okay. But we're watching it. Like I said to you, we are watching it. Look, have a look. The newbie traders saw this market going up, and then they saw it push down here, and it's like, yeah, definitely, it's just tapped into this little imbalance. They hit the button for a sell, but look, we're all the way back up in here now. A lot of them have been stopped out. Remember, they've got their spread. So we don't jump in like that. We want an indication. Now let's go back into just the basics of what we mean by an indication, what we mean by a correction, what we mean by continuation. Then we can, that will take us nicely into the end of the session. When the market's trading, we're seeing structure like this. Now we're not going to see, like, it's not going to be textbook, like it's just come out there, you know, man are doing these pushes with a ruler and getting the angles perfect. But you have to be able to look and see these higher highs and these higher lows. All right. Now, when we come up into here and we see this here is a break of this structure. It's a change of character, but we can't just hit the button here because we don't know. And when it comes back, remember how the markets move, yeah? That there is also internal, like this is very simple. It's a way of, I'm going to draw another one out for you. So we need to wait for a correction. So let me draw it in a different color. We need to wait for, we need to wait for a correction. Like so. And then we want to wait for a continuation. Like so. Like so. But we have to make sure that this also coincides with our higher time frame narrative. Okay, we want to make it sure it coincides with the higher time frame narrative. It's no point trying to say we're selling this when the higher time frame narrative somehow is that we're in a discount. We want to make sure that we're doing it from this premium. And as a beginner, you can take that trade here when that candle closes, placing your stop above the high. Have a look at what I was just talking about. Look, I've just seen it now on the side of my eye. All right, have a look. Look. This right here has just taken out all those people that saw this little wick action here, saw this market retracing. It's just taking it out. So what have you learned from that? You've learned that if you see the market rallying up crazy, and then you see it start making this movement here, you're not going to just be jumping in because you haven't got the structure that you need, the indication, correction, and continuation that you need. You don't have it. Okay. This is just building all this liquidity is building up liquidity of people that say, yeah, we're selling it now. And then this little wick here has come and taken people out. But we still don't know whether or not this market is turning around until I start to see a change of character or break of this structure. Because if I was to draw some lines in here, have a look. If I was to draw some lines in here, I'd have to draw my line like this because this is the last low before this highest point. So this becomes structure on this small time frame. I can't just hit the button and play snap and just think it's going to start selling off because it may not. It hasn't given me any reason to think to itself that it's about to sell off. We have definitely captured this liquidity of this Asian high, which is this red line you see here. Nam, nam, nam. That's giving it the fuel. But is it finished? I don't know if it's finished. I don't know if it still wants to go up here and completely close up some of this little imbalance level that I've got in here. Or it wants to do so. I don't know. I don't know. Again, look, you see this blue line here? This is London high, previous New York high. I don't know whether or not it wants to come and take that New York high. It's very possible it wants to do that. It's very, very possible it wants to do that. And I want to tell you guys something. The reality is I want to give you guys some key time frames for you to be trading. And those key time frames are going to be within this London block. Okay. Go on down. You're going to say something?
Right, man.
You're going to say something, Darren?
What do you mean on your shit? It's not.
No, he accidentally unmuted himself. Okay, so I'm saying that we want to be able to understand when is the key times that we want to be trading. We want to be finding great trades in this London block here, yeah, which is a couple hours. This is like a kill zone. And then we want to talk about New York kill zone. All right. So from London open to about 9 o'clock is a lovely time. And then from New York, we're talking about from 2:30 within a range. And you can use this indicator. You can use this indicator to be able to identify, those kill zones. All right. You should be able to know it yourself anyway, and you could be able to draw them in with a little line, a little vertical line for the session that you're trading. But the indicator will be able to show you this Asian session, this London session. All right. So remember what I said is the indicator is called ICT kill zones. If you want to see what it's called here, I'll take a screenshot. That's it here. This is it here. ICT kill zones and pivots. All right. But ultimately, you're able to draw your own lines in. Have a look at this line here that I drew in here. Just drew a little vertical line at 7 o'clock. That was when London started, you see? Now, this area is offering you some sort of energy, some sort of fuel in regards to what the market may want to do. It's giving you high probability because there's some volume coming in here. So when we see our indication correction continuation in a particular direction, understanding where the liquidity is, okay, for the fact that we're thinking from a higher time frame that this market may want to push down, we take the trade. Now, right now, when this market gets outside of this zone, I'd prefer that you guys wait around, chill out if you're not already in a trade, okay, and be able to be at your charts again at this little line here, which is going to be London session. All right. I'd say be here before London session so you can understand and see what's going on. What are you looking for? You're looking for structure for your larger Russian doll and looking to see if you have in an internal, in the daily, if you're seeing indications, corrections, and continuations. Have a look at this market we were just talking about that I said to you, we're not going to get carried away. We're going to keep looking at it. If we don't see an indication, correction, and continuation on a smaller time frame, I'm looking at 1 minute just to show you because it's so fast. We cannot get into this trade for a sell. And I do not want to buy right at the top of this range. I was in this trade from down here, closing at that trade at 4 figures. Yeah. We're still watching it now. And to me, from this trade pushing up here, there is some huge draws on this energy that we can see up here is looking like to me, not that I have a crystal ball, that it may want to come and take a previous New York high, meaning that this thing keeps pushing up into these levels. It may want to come and push up into these levels, and we may find that that happens. Maybe the market comes up here. We may find that this market's sitting around all this time. It might start doing the hokey cokey in here for a little while. And then if we see at New York, we've seen this market pushing up here, grabbing liquidity, and then we're seeing some indications, corrections, and continuations. I'm going to be thinking to myself that this market, okay, wants to sell off. Wants to sell off. Now, one thing you need to understand when you get into a market is, for example, like the GU, you need to understand what it does on average, how much it moves within different sessions. Okay, within different sessions, like how much can it move? So let's go and have a look. Obviously, you can go and do your research and go and look at different things. Let me hide all these things here. But say, for example, we look at, this is the New York session, this blue one. Just so you know, red is Asia, yellow is London. Okay, so let's go and have a look at some of these bigger blue sections. And I've only got it for 3 sessions here. All right, I can add some more. How you add some more? You go into this and look, I can add 30 sessions going back. Then we'll see some more going back here. Can you see? All right. So you can see these moves. You can see the different sessions. We can see the different characters and characteristics of these sessions. Look, Asian session was here. What did London do? Nam, 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 nam. Capture the liquidity and then it ran in this direction. Why did it run in this direction instead of the other directions? Because the overall narrative, have a look, was some bullish. And let me delete everything quickly, just to show you here. This overall narrative was bullish. Okay, we're focusing on here. If you don't know what we're looking at, we're here. The overall narrative of this market is bullish. Yeah, based upon intraday. And what do I mean by intraday? Look, I mean by this up this point over here, this is the next day. I think this can allow me to put some daily markers in here. Let me see if it allows me to put the days. One of these little indicators, is it there? Yeah, there you go. Look, you know, we can see here, this is Sunday, this is Monday. The market here is, look, Asian session is framing. Bearing in mind the market's been bullish. The Asian session is framing and giving you a potential chance to get what's going on. What are we waiting for? A take of liquidity. Nam, 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 nam. Let me put that time, Monday, the 8th of July at 8 o'clock. All right. So 8th of July at 8 o'clock. Okay, look at this. This is Asian session has framed what's going on. We've already understand the market's been bullish, making higher highs and higher lows and higher. And we might have a higher time frame narrative of what we think or what we want the market to do. But we can see the market has been making higher highs and higher lows and higher highs. Then when we see this liquidity being taken, the Asian session liquidity that's built up over here. Have a look if I drop my time frame down so we can see what's going on. Go to my 5-minute time frame. All right. Now, based upon even if we want to look at indication, correction, continuation, even on a 5-minute time frame, which we can get all the way down to our 1-minute time frame. Okay, we can, and I'm going to show you how we can get even better entry, but have a look at it just on this basis. We can see structure, lower low or low, lower high. This market's moving, making lower lows and lower highs, making lower lows, breaking structure. Because here it's still a low, and here is still a lower high. But here, when we see this little previous structure here, the market's broken through here, lower low, lower high. But now we're in a discount. This is this orange line. We're in a discount. You see? So now we're in a discount, and I can see Asian low here, and I can see the market push down here and then push all the way out here, making this wick. I've already told you, when you see these long wicks going in this direction, it's showing that buyers are coming into control. Even if I look at it on this higher time frame, which is the 5-minute structure, look at it. Look. Indication, correction, continuation. You could have taken this trade on a 5-minute time frame from here, placing your stop below these lows, or if you want to be even safer, swing low below here, and look how profitable this market is going. It's going to space, and you should be over the moon about that trade, because you got into that trade in a discount, really at a real low over here, a real, like all the way on this orange line is where you took that trade. Lovely trade, pushing it. That's on a 5-minute time frame. But let me show you something on a smaller time frame. Have a look. We see that market push down in here, grab liquidity. I drop my time frame down to my 1-minute. Hopefully it gives me the data. Yes. All right. So have a look. Whoops. Have a look. The market pushes down in here. This is that Asian low here. All right. Pushes down in here. Pushes down in here. I can't just hit the button. I'm not playing snap. I can see this energy happening in here. Let me make it like this. Let me do that. I can see this energy happening in here. Look. If I was to even draw some more lines, I'm going to get even more detailed. We can see this energy happening in here. Market going down here, up here, down here, up here, down here. Have a look how we see the market come into these levels here. All right. Now we're looking at this structure over here. All right. This market's pushed up and broken this structure. We've got a closure here above this level, but we've seen how this energy breaks this structure. So we've got this indication. We've got a correction in here. Sorry, we haven't got this indication in regards to this structure here, but in the smaller structure in here, we do have an indication, correction, continuation. An indication is we want to see this closing above these levels. We want to see it closing above these structural levels in here. I'm on a 1-minute time frame, so it's a little bit smaller. All right. But we can see how the market has wicked down here, captured liquidity. And then ultimately, we want to see a break of some of these structures that I'm talking about. There's structure in here. Okay. There's structure obviously in here. Okay. And we can see how the market indicated above these structures, corrected, and closed back above in these levels and continue to push up. But if we're looking at this as a swing structure, even if you want to look here, guys, yeah, even if you want to look into these type of levels here, remember I showed you the 5-minute entry. I'm just trying to show you a smaller entry. Is for me, as soon as I see this market wick down here, capture liquidity, and then I see a push out that breaks this structure here, you might not be able to see this structure because it's so small, because unfortunately I'm looking on a 1-minute time frame. It looks a little bit sketchy to you, but I can. And one way you can always try and see it for yourself is to flick to your lines. All right. Flick to your line charts. Anywhere where you see these mountain tops is an area of structure. It might be on a smaller time frame, but it's an area of structure. Yeah. Can you see where my lines are now? All right, let me try and get rid of that indicator, which is taking up a lot of eye space. All right. So this market here is pushed down here, grabbed the Asian session liquidity, and then pushed up and broken some structure. It hasn't broken no structure in here. Yeah, maybe here we got a little pusher there, but it's broken the structure here. But it's not only there, it failed to make a lower low, made a lower high in here. Okay, let's have a look at it. And if we look at the actual market, how it pushed in here, have a look, because obviously the line chart doesn't take into consideration the wicks. We've got this push, we've got a higher low now, and we're getting higher highs. All right. And for our own confirmation, we wait for candles to close. Even if you waited for that candle to close over here, it's a little bit tight, or even this candle to close over here, you would be in this trade for the buy. You've seen the market take liquidity of the Asian low. The Asian low is framing what potentially the market wants to do. The market is pulled towards this red line here, which is the Asian session low, because it's drawn towards liquidity. And then we've had a reaction of that liquidity. And let me show you something here. For example, here on this larger time frame, we really want to see this market get out of this level. Though I've told you about this 1 minute time frame, me seeing and being able to get in here on a 1 minute entry. We want to see the market free itself from this area. And what do I mean by that? I mean, we want to see strength and speed. The market fights a little bit, but frees itself here, boom, with strength and speed. And understand, when it does strength and speed, we normally get an imbalance, a displacement, an inefficiency that happens as the market moves so quickly. This also offers us an entry. When the market moves with strength and speed and creates an imbalance, we know, even if we're going to look at this on the 5 minute time frame, that the market broke this structure. We understand after indication comes correction, and normally that correction comes to where? Imbalance. That imbalance was the imbalance that broke free from this structure, from this level. Boom. When this market comes and taps back down into here, if you never was able to get an entry earlier, which you might not have because you're not in a 1 minute time frame, when this market comes and taps back into here and you see this, what are you waiting for? Look at it once again. Look at the structure. Yeah, look at this structure. This is the structure I'm drawing. Look, taps into our level. It indicates breaking this bit of structure in here. It corrects without breaking that previous low. And it continues another entry to get into that trade. If I got in an entry small here, I could have taken another entry here. And watch how that trade goes and rallies. And where does it go into? Well, the Asian session high. This is where I'm targeting, because that's where the liquidity is. From down here, the liquidity is going to be above this level here. So that's where I'm targeting. And that could easily be a 1 to 6, 7, 8, 9, 10 trade, depending on your entry. That's where I'm going to be targeting. But because I got into this trade in such a strong area, have a look in this discounted area. And because I know how to very simply, let me zoom out here, be able to draw my trend lines, which I told you is a great guide. Do not sleep on your trend lines. It's a guide. So when I draw this trend line in here, which is drawn very badly, okay, like so, and I'm able to put the top end of that trend in based upon, a level that I've seen the market trading within. Can we zoom out some more to even show you even better? And let me get rid of this indicator, which is hurting my eyes. Just by putting in that range of how that market's been trading up within. All right, I can start pulling this down just by putting in this range. When I got this entry down here, I'm thinking to myself that even though we've gone and we've targeted those Asian session highs, if I take it back to where we were, even though we've gone and targeted those Asian session highs over here, that ultimately the market's trying to get over to a premium. You see it? So when I'm in this trade and this trade's going really well, I can take some profits here, some partials if I wanted to, depending on the trade. But ultimately, I'm thinking to myself, on a long term, this market's going to be going towards the premium level, because the market just trades from discount to premium, from discount to premium, and not just within this train track of orange lines, because this is just a guide, but within the structure. This is that last low that led to this here. This is the structure. You see it? Look at when the market comes back down here, boom. All right. 1 second, we've had a change. We've had a change of structure. Let's have a look. Then I'm going back here sometime. Oh yeah, sorry, that's fine. Okay. So we've seen the market make its retracement because we understand the market moves in waves. So when it broke this level in here, when it broke, look at this, market came up here, came down here, pushed up here, came up. When it broke this level here, this level here, have a look. I'm looking at this level here. If I was to draw a path in with getting rid of all of this stuff that's hurting my eyes, if I was to draw a path in here, it would look like this, right? If you used to draw a path in here, you can see it looking like this. Look, from here to up to this level here. Boom. Then we've seen a reaction there, definitely. Boom. Then we've seen a push. Boom. Where's it come and sat back down upon? Boom. You can see a reaction over here. Boom. Where can this market come, decide it wants to come and sit back on? Boom. It could decide to do that. Yeah. So even though, like I said, it's not, remember I was drawing it before, it's not textbook exactly like they're measuring it, but you can see structure. If you can't see it, let me delete this, everything off my charts, draw this again. If you're looking at this and you can't see how this market is making these structures, you need to look at more charts. Because even though this isn't textbook, this is higher highs and higher lows and higher highs and higher lows. Now, when I say textbook, I mean it's not a perfect zigzag. This is what the market is doing. It's making these waves. It's definitely not doing this, is it? And it's definitely not going sideways. So whether or not this is a little bit like this, yeah, so whether or not this is this here is a little bit like this, or this one, you know, came a little bit here, and then this one came a little bit, you know, lower here than it did before, or high, it doesn't matter. It's still making lower lows and lower highs and lower lows and lower highs. And that's what you have to understand. That's where the respect comes in, to understand that is the structure. Now, when you combine that with what I'm saying to you of how I was able to get into the trade today and why right now, have a look at right now, GBP USD, right now, this minute, I'm going to put back that indicator. I'm a bit wary that it's a bit intensive on the eye. I'm going to try and change the colors and stuff in my own time to make it less intense on the eye. It's like a disco, all right? This market has just captured this Asian, it was here, just captured this Asian session high. All right. And I'm looking at it. I can't take a decision yet. I can't do anything yet. But I know that we've just pushed above this Asian session high. Nam, some liquidity from over there. But very close to it, we can see some New York highs as well. Yeah, a place where this market had a strong push away. Have a look, created this imbalance when it pushed away and broke structure. Yeah. So even on this, even when we're looking at it like this, have a look. The market was in here in this level. Obviously, this is fast price action, but we can see how the market came up here, made a higher high, higher low, higher high. Then it made a higher low. Then it failed to make a higher high. And then it broke some structure in here. This is structure. Yeah, it broke some of this structure in here. Boom, 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 and took out our last solid structure in here. We understand when this market comes back up in here, it's coming back to tap into that inefficiency, because this is where the market started from, to break that structure. Boom, tapped into here, started to run. And it tapped in here in the New York session, the session whereby we want to get some action, where higher probability setups are happening. This is when I want you trading, either in this New York session or in the London session, because it's higher probability. So when we saw this market tap into here, it could have been a limit order, or you could have market execution. It could have been like this, just taking into consideration the imbalance. Okay. Where are you trading to? If we're up in here, we're trading to see whether this market is going to go back down to the structure. All right. So from up here, the structure was here, right? Market came down here, pushed up here. This would be the structure that the market, look, it's in hindsight, you can see all this happening. But in the entry, you would have just been up here. You would have just seen that wick and you'd been trading down to this structure. If you took this trade, that's a 1 to 8 trade. It's not a rubbish trade. Okay. Simply being able to see how the change of directions happened prior to our session. So this is giving us our, okay, we've seen this indication. This is the correction. And I said, if you're wicked and bad, you'll be able to understand how to take the entry here. Have a look at this. This is the indication, breaking previous structure. This is the correction. If you're wicked and bad, you learn how to take this trade here, especially if it lands right in our New York session, which is our kill zone. And then you trade down to structure, which is this area here. Yeah. And that here on a small time frame. Watch, have a look in here. If I drop my time frame down to a smaller level, I'm going to try and see if it's going to give it to me so I can show it to you. That's 11th of July at 3 o'clock. 11th of July at 1500 hours, I believe. Have a look. I'm going to drop down to my 1 minute time frame. Hopefully it gives it to me. When that market came and tapped into this level here, well, we can't see it. It's not a better entry than thing, but we can see here. Have a look. We can draw this range in as the market pushes up in here, like so. The market starts to go sideways in here. If I drop down to my 15-second time frame, you'd see even more, but I'm not going to bother. All right. We can see that this wick here, have a look, this little John wick over here is the last low before this highest point. We can see how the market comes, and even if you want to push it, say, turn around and look at this structure in here, market indicates. This is all indication. This is correction. This is continuation. You would have been able to get into this trade like so if you wanted to, and where you're trading it to, you're trading it down to structure. And that structure, then maybe that trade is no longer 1 to 8, maybe it's a 1 to 5. Let's have a look. 1 to 3, 1 to 5. Still a great trade. Yeah, still a great trade. You have to let that market play out. All right. But you've got an entry within this kill zone. And the market plays out beautifully. All right. Let's have a look at what's happening right now. Right now, like I said, coming from down here, we're looking at what's going on. What is this market framing? Now, what we might see here is we might see this market. Let me go to my 5 minute time frame. We might see this market push up, create an indication on the 5 minute time frame, start coming down here, but we don't see the market correct, or the market starts correcting slowly back towards a level, back towards an imbalance. What we want that to coincide with is when after the market indicates correction continues, you are able, there isn't a way you can get involved in that breaker structure on a smaller time frame. When the market will kick back to go for that imbalance, it'd be fantastic if we see that coincide with this line here. New York open. Because if we see this market coming in here and right by here to tap back into an imbalance after indicating, correcting, continuing, but coming back up to tap into that area in New York, that would be a strong way of us saying that this is in this kill zone, that this market may be wanting to run down. Because on a bigger picture, it will just be the indication, it'll be the correction in here, trying to go for the continuation on a bigger time frame. Because remember, we're quite small here, looking at 5 minute times, looking at 1 minute time frames. All right. So right here, I'm looking at this market now for today. My outlook for today, which I drew on the other path. I think I deleted it now. Is that we have captured the Asian high, and we're very close to capturing a previous New York high from London session. That is liquidity. Nam, nam, nam. So they didn't want 1 mil. It might be trying to go for 2 mils. After it goes for those 2 mils, I have to read the price of what's happening right now. Do I get an indication, correction, and continuation pushing back down into these type of levels, maybe trying to take this Asian session low. Look where the liquidity is that hasn't been taken. Yeah. Over here. Is it coming to come and take these lows in New York? Especially if, like I said to you, I see it playing out in a way whereby my indication, correction, and continuation, or it tapping into an imbalance happens at this white line or around this white line for a couple hours in that zone, which this indicator will mark for you in a blue square to represent New York. Okay. If it's happening in there, I'm even more excited about the trade because it's happening in a high probability time frame, which is when all the volume comes in the market. So that market may, right? And you see how we're here? For all we know, this thing could dance around for a little while. Have a look. Could dance around for a little while in here. Could dance around for a little while in here. You could see a little liquidity grab. See this happening small, this happening. New York kicks in, and all of a sudden we see this. Very, very possible, especially when I look left and I can see not only this liquidity below Asian session, not only this liquidity below this V bottom, yeah, where we know that liquidity exists below any bottom, but this huge imbalance also that came from CPI. You see? So I'm going to be looking at this trade right now. And though I took this trade all the way up here, I stopped myself at about here, 4 figures. All right. I'm going to be seeing whether or not this market is going to, if this continues pushing up and breaking some structure, etc., then that's fine. We'll watch it and see what happens. Maybe it wants to really grab this liquidity, then starts dancing around here, and then we see what happens in New York. But I want you guys to now, for today, understand that what we are looking for, even if the market is going up, even if the narrative is that this market is, bullish, that this is the narrative, that this market is bullish, that depending on where price is, yeah, and in these daily sessions, because we're day traders, you want to be in a position whereby you can understand and you can see that you're waiting for a grab of liquidity, an indication, a correction, and a continuation for you to be able to get into a trade, even if the narrative is bullish, depending on time frame. If the time frame lines up for New York, you may see there is a short-term sell, because where are you selling to? You're going to sell to structure. Yeah, you're going to sell to structure. And this works the exact opposite way in regards to a buy. This market comes down here into an area, a point of interest. Here you might see some structure in here. The market comes down in here. The bigger narrative is it's bullish. This is a great trade for you to be able to get in. If it was a bullish trade, you're waiting for an indication, a correction, continuation. If that also lines up with grabbing liquidity, for argument's sake, from like an Asian session like we showed before, like there's an Asian session over here, and then you see this market grab liquidity here, nam, and then indicate, correct, continue. This is fantastic because now you're in after seeing it grab the fuel from the liquidity, and you're in a demand zone and the market's bullish. This is fantastic for you to take a huge trade. But I'm saying even as a day trader, you're able to take these retracement trades based upon watching price action and aligning it with what's actually happening in regards to when those high volume periods comes in. Because remember, the market moves in waves. So it must push back down here. And if you happen to be at the charts when you see things align, indicate, correct, continue, you're going to be able to do that. And what are you looking for? You're looking for it trading back towards another liquidity level. Look, have a look. What did I say? I said this market could come and grab this previous New York here, New York high liquidity. All right. It could grab it. I was happy with my profits here and I moved my stop. But ultimately, what I probably should have done there is just taken partials. What do I mean by taking partials? Means if I've got a 10 lot, I can take off 50% for argument's sake and make it a 5 lot, bag that and leave the rest running like a moon bag, make the trade risk free and leave the rest running. It's only a little bit more, all right, to be fair, all right. But look how this market is now taking the liquidity from above this New York high also, all right. It's taking that liquidity from that New York high also. all right, which is very interesting. Yeah, it's very, very interesting. And when is it doing that? Okay, we're still in this London session over in here, obviously. We're taking this liquidity here. And I want to see, am I going to be getting some sort of, are we going to be getting some sort of wick rejection? Are we going to be getting some sort of way in which we'll be able to tell and go, okay, this market looks like it's making some structure. And we've got a little wick rejection, okay, to show that the sellers, sorry, are coming in play. And maybe, like I said to you, maybe, because we don't know, this market decides to just dance around for a lot of the day now. All right. Maybe this continues pushing. Yeah, maybe it continues pushing. But when we start seeing New York coming and we know we've grabbed all this liquidity, we want to be looking to see what's the market going to do next after the liquidity has been. We've taken this liquidity here. All right. We've taken the liquidity here. We're in the process, grabbing this liquidity here and filling this imbalance that I identified in here. All draws on price like a magnet, pulling the price up in here. The questions you just ask yourself is, where are the next draws to price? That's all you want to know. If you know where the draws to price are, you've got to just try and find a trade that's trading towards those draw on price, isn't it? You've got to find an entry trading towards where you think the price is going. To say if I think there's a draw on price here, I got to think to myself, okay, if I think there's a draw on price below over there, or I think there's a draw on price beneath, what is the market doing and where am I in the range? Do you understand? Even though the market may be pushing up bullishly, for argument's sake, like so, the question is when I draw these little lines in is, where am I in the range? Because if I thought to myself, I'm right at the top of the range and we've grabbed this liquidity, look, nam, 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 look at all these places where we grabbed the liquidity from. Above here, I see I grab liquidity here. Even if I grab the liquidity here, I'm still near the top of this range. Because remember, this is just a range, it's not a line. So when I see New York happen and I see volume coming in the market, and then I see indication, correction, continuation, breaking structure, well, at that point in time, that gives me enough of signals to say I'm trading from a premium. The market's grabbed liquidity, enough fuel for it to start making a journey in an opposite direction. You know, ideally, I'd like to be buying this market in this energy here, but I have no issues with trading it into the areas from where I can buy from. All right. So just to recap before we finish up, I know we've run on again. When you're looking at these markets and you're seeing structure doing this, the higher time frame narrative is not only, this is what we're adding now, this is what's changed from, you know, previous weeks, is that we're not only adding this indication, correction, continuation, we're adding the fact that the market took liquidity, especially from these sessions, which gives us a good bearing of where liquidity is, took liquidity. And then we don't just, at this point in time, the market breaks here, and then we just come here, because look, if this here, this push down here, maybe it respects this low. You see? So we wait for not only the correction, we can wait for the continuation here. And as a newbie trader, this is a very simple and safe trade here, or more aggressive here. It's a safe trade for you to say, okay, the higher time frame narratives, we've tapped into a premium, and therefore we should be at least trying to sell down to that discount. All right. And that discount, we can also look left and align it with our structure. But in GU, we understand that this market only moves a certain amount of distance per day, which is about 35 to 40 pips in sessions. So we're not expecting this to go for 8 zillion pips. So therefore, we must find ourselves a nice entry. And whether that's going to be a 1 to 2, 1 to 3, you take it. If you're able to get an entry in here, because you understand the concept when this market taps into here, and seeing the candlestick structure, seeing indication correction continue, you could easily, in 30 pips, be taking a 3 pip, a 5 pip zone that's going to go run for 30 pips. Well, that's nearly 1 to 10, 1 to 7. It's tremendous trades. All right. So you're always looking for this indication, breaking previous structure, this correction and this continuation. And in this correction, you can get early signs of the continuation if you understand how to drop your time frame down and look. But if you're just beginning and haven't got your wins under your belt, don't worry about that. Wait for that candle to close below this level here and just take your here, placing your stop above here. Why? Because if you get sucked in, what can happen is this market can start running in your direction, and then it might come to fix this little imbalance in here before going. This is why in an ideal scenario, you see this happening, pushing back up into this level here, because this is the real move. This is the fake move that could still give you great pips. Don't get twisted. That indication correction continuation can still give you a lovely 1 to 3, 1 to 5. But if you see that this here, New York or London, is just about here, and you see price coming and approaching that level of coming and tapping into that imbalance, drop your time frame down and look for that entry once again here. Because there would be an imbalance here if this market moves very sharply away, and you want to see move sharply away from a zone. But if you see a kill zone session, London or New York happening, the market's moving, pushing back up after maybe you making some good profits here, understand it's coming to fill that imbalance that was formed in here. And if that hits in the right time in your kill zone, you're going to see that market be in here. You're going to see a smaller time frame indication, correction continuation, and that market run down. And this is where you can get quite accurate and quite small entries instead of it being that this bigger entry, for argument's sake. Instead of it's being like this, however, where you took that indication, correction, continuation, you can get an entry looking like this, just taking into consideration that imbalance. And where are you taking that trade to? Taking it trade down to wherever that structure was before that market started to come back. You're taking that trade to that structure. And I'm saying to you, if you can get small entries in here and you understand that this market's only going to move about between 30, 35 pips, that's you. Could be out of the game, killing every single day. All right. And do not take my word for it. All right. It's not good enough to take my word for it. What you have to do is go and back test it. Go and try and see if you can draw some basic lines in here. Go and try and see if you see over here, for argument's sake, here, let me put my little indicator on. Oh, so it's not showing me because I'm on an 8 hour. All right. So I'm going to identify this area over here, just with a circle. I'm going to try and do it again. I'm going to get rid of this out of the way. Go and see if this area here has got anything here for you to be able to tap. Look, it happened twice, not even once. Look, here is Asian session. Here is a liquidity grab of Asian session. But you know, the market's greedy because you can see New York session as well over here. Nam, 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 comes down into this level here and then goes. Here is Asian session. Frame. Remember, Asian session, when you wake up, has been going on through the night. So this is perfect for us in UK. What are we waiting for? A run of the liquidity of the Asian session low. It runs the liquidity, then goes. Over here is Asian session. We see a run of the liquidity here. Then the market goes. Yeah, and we also see when the market goes and runs that liquidity, okay, this is we also see the market, you know, how afterwards we see a reaction. Every time liquidity is taken, we see a reaction. Every time the liquidity is taken, we see a reaction. Okay, and we can drop our time frame down to get better entry, but yourself start looking and seeing these patterns. Looking and seeing these patterns on a bigger time frame, even if it's just an hour, knowing that you're not going to take an hour, but seeing it. Okay, if you can see every time Asian session, there's a run of liquidity first, and then the market goes, okay, interesting. All right. So in London session, just like what's happening now, but in the opposite way. Look, just like what's happening now, but we're doing it in a bullish way now. Took Asian session high, and it's going and taking the London session high. That's what's happening if I go to present time in the opposite way. Okay. Then what do we see? After it's done what it needs to be, it does. We see this market going and running and taking the Asian session. I took the low, then it starts trading towards the liquidity and taking the high. You see it? So we're seeing this in this New York session, it pushing down here. And then we've seen the market come and push all the way back up into here to take this liquidity. It's what's happening right now in the opposite way. Let me show you a little flex that you can do in trading view. You can flip this upside down. Watch. Actually, it's not letting me do it. There you go. You see what I just done? I flipped the charts upside down. All right. Why does it allow you to do that? Some people like to sell the markets constantly. Some people don't like to buy. Some people like to see everything upside down, is what it is. All right. But just like it did here, look, grabbed. This is happening right now. This exact kind of picture where it grabbed, it took Asian session high and then kept reaching for a New York high where the liquidity was. And if I flip this back, if I flip this back, if I try and flip this back, if I try and flip this back, here you go. And I go to present time, have a look at it. Present time, refresh this chart, look at it on a smaller time frame. Let's just go 5 minute. Grabbed Asian session high, grabbed London session liquidity above here. And the question we're asking ourselves is, are we getting up on a 5 minute time frame? You can see structure all the way down here. Okay, let's drop our time frame down so we can see a little bit more. On a 1 minute time frame, are we getting what we want to see? What would I be doing here? I'll be drawing in some lines here, making sure I'm touching. I don't have to because you can see it with your eye, but it's an easy beginner's way to be able to see different structural levels. Is this market now deciding that it wants to go and start pushing down here? Well, maybe not. Okay, maybe not. Because what we want to see is we want to see clear indication breaking some structure. And I can't see clear structure in here. It's a little bit frothy. Okay, it's a little bit early. But it'd be nice to be able to see, you know, there is some structure in here. And what you're looking for is you're looking for those swing lows, even on a smaller time frame. And I did show you guys how you identify those swing lows. And, you know, I'm not really getting one in here. Yeah, I'm not really getting one in here as such. Not on this time frame. The way in which I showed you how to identify it in regards to having a either side of it, the candle is a lower wick. But at the moment, this market is trading down. It's trading within this little range here. This little block in here. All right. So I don't want to be too hasty, especially when we're still in the London kind of window. We are. Okay. But there's no problem with me just zooming out here and being able to wait and see some real intention. Yeah. The market's taken New York session now. Does it want to keep wicking up here? I want to see, remember what we saw in the bigger time frames. We keep seeing these when we know where the market's doing something, we see that wick rejection first. Then we see a move away. So there's nothing wrong with turning around and just watching this now on the basis that it's framing a move potentially for this line here, which is New York session. It might start framing a move. Okay, it might push up again here. Have a look. Might do this. Might push up again here. Framing a move, breaking some structure on the basis that it's going to New York session in here and go after grabbing the liquidity from up here. Maybe, baby. All right. Session was a little bit disjointed backwards and forwards, but I was just trying to, you know, whittle in and try and show you guys the importance of understanding of trading towards liquidity, seeing how this, you know, when this market sees liquidity here, you don't know what it's going to go and do. I'm not trying to say when it trades liquidity, you just hit the button for a sell or hit the button for a buy, but you're watching it going, okay, we ate that. Look, if you was in for the buy, you're trading towards this liquidity. I think I was in this trade here, and to be fair, I could have stayed in a little bit longer. I probably moved my stop a little bit too early whilst I was watching you guys, all right? Whilst I was teaching you guys, and I probably got stopped at about, I know, somewhere in here or some sort of retracement in here. But look, now we've now taken New York liquidity, and we're seeing a reaction straight away from that liquidity. Interesting, all right? But what would be more interesting is if we make sure that our trading stays within these blocks, okay? Stays within these blocks. So this block in a minute is potentially going to end at 10 o'clock. All right, this real UK kind of kill zone block is potentially going to end over here at 10 o'clock. Now, yes, the market still may move and still may do certain things. Maybe we see for the rest of the London session, the market come all the way down here and take the liquidity. Therefore, my bias, look how it's changed. If I see this happen now, for argument's sake, for the whole day, this market comes down here, grabs this liquidity below Asian session, has a reaction, indication, correction, and then New York opens up, I'm going to be in here for the buy. Because this market's been bullish and it's now taken the liquidity once again from a different area, giving it the fuel to run in opposite direction. The market is trading from liquidity to liquidity to liquidity. Do you see what I mean about trying to show you this sensitivity of the daily, the intraday movements? Because when this New York session energy happens, this should happen quite quick. It may be pushing back up into these levels. It might happen quite quick. Or if there's no liquidity levels over here, this market, we might see this market come in here and be deciding that it wants to continue towards some of these previous liquidity levels. Have a look. There's Asian session. And the only way we're going to identify that or have an inkling of that is watching price action and understanding where we are in the bigger Russian doll. And we are near a premium. We just don't know whether or not we've finished. I think there's still a bit more legs in it, but we just don't know whether or not we've finished being in that premium and want to start going into discounted areas and breaking larger structure. Because have a look. If I get rid of this indicator, which is taking up a lot of eye space, look at the bigger Russian doll. The bigger Russian doll is that line there. And this line here. So could this market start pushing all the way down here into this imbalance and coming down in here? Of course it could. But if it does get down into these levels over here, whenever it is, then we're back down into a discount where the market could decide to, on a bigger picture, go back up in here. All right, guys, amazing day. Amazing day. Hopefully, you know, I've touched on some different things. Hopefully this is what you need to do for today. You can go and get this indicator, or you don't even have to get this indicator if you wanted to. You could simply mark it out yourself. All right. You can put a little line at 230. Okay. And you can color it. Have a look. Let me delete everything off my chart. You could go and get a little line here, for example, this session. So look, the easy way to do it is to get this indicator. It's called ICT kill zones. You can put on the last session or the last couple sessions. So if I go into this, if I click into it, you see I've got quite a lot of things happening, but you can get rid of some of those things and I'll show you how. Oops. Look, you don't have to have showing me the text, showing me all of these labels here. You don't have to have it showing me all of these days of the week, because I know the days of the week. All right. It doesn't need to show me. Yeah, the opening prices. So I can hide all of those things there. And at the moment, I've only got it showing me 3 sessions back. Yeah, so it's only got 3 days worth of these lines and stuff. It's showing me. That's enough, but you could put on more if you wanted to see lots more going back. It's down to you. Okay, you can change these colors as you wish to make, because remember, some people have black charts, some people have white charts. You want to copy my charts. I like the black charts because it's easy on my eye. Okay, it's easy on my eye. And you can make this as you want it to be. Now, once you've done that, then you're in a position whereby you can look at this and start thinking to yourself, okay, these colors are all off for some reason. They're all off. Great. Okay, I think I need to save that thing. I need to redo this now. Colors are all off. But you're looking at Asia session and you look at this market rocking. It's taking liquidity. It's took the Asian session liquidity to the London session liquidity, and it's pushing up towards this high. Remember, liquidity is all of these different levels. It's not just the sessions. It's the imbalance. It's the highs. It's the equal highs. Just think that liquidity is the fuel. And right now, this market is nam, nam, nam. It's getting bare fuel. If we are coming to near the top of the range, remember we drew this range, maybe you have to ask yourself, why is it getting so much fuel? Maybe it's getting so much fuel because it wants to make a big old journey. Maybe. Maybe that's why it's grabbing so much fuel, Asian session, grabbing so much fuel, previous New York session, grabbing so much fuel, moving towards these heights. Because maybe it wants to make a big old journey. And all you have to do is be able to turn around and understand, like if you can see here, that that is London session. And this is going to be New York opens. And you want to be able to, if as a day trader, just be able to trade a couple hours, few hours of a New York session and done with. Because the you want to restrict the amount of time that you're taking loss, you could potentially be taking losses in the market. Trading all day long is just, it's like you being in a ring for the whole day. Well, yeah, you might win the longer you're fighting the guy, but those punches to the face for a whole day, it's not going to be good. So this window here, which is London session and New York session, this is the previous ones we can see over here. I'm sorry about the colors because they've changed, confusing things even more. And you can change them back in, you can change the colors back here, change into something different. Is it here? Yeah, it's there. You can change the colors back to what you want it to want to see it. Yeah, I mean that's how you have to look at these markets, guys. Always chasing the liquidity, and we've seen a big run on liquidity right now. Big push from liquidity right now. And now I'm a bit annoyed that I got out of that trade early because it's really going for it. Went straight past these levels and continue to push. It's only because I was, I didn't want to manage it. I should have just left it risk free and let it run. But hindsight's a beautiful thing. Still a 4-figure trade, but now it'd probably be double the amount that I should stop myself out of. All right, but it is what it is. But guys, good, amazing day. We're gonna put something on in our YouTube so we can see, we can learn something. I'm just having a look around and trying to see what can we watch. I'm gonna watch something about with what's his name? I'm gonna watch something by I'm just looking through here. Yeah, we're gonna watch something in regards to talking about what's his name? Piers Morgan talking about Terrence Howard's science, etc., etc., etc. I'm gonna have that playing in the background, or we can watch something on trading. I was just looking at something, sorry. We can watch something on trading, or I tell you, we'll watch something on trading first, and then we'll watch something in regards to something a little bit different. I don't know who this guy is. I don't know what he does, but we're going to start playing his session. He's playing his video. It says learn from live action trading session, 20th of the 2nd, 2023. FTSE DAX. I don't know. We can watch it, and very quickly we can make a decision of whether or not the guy's just fraffing about or not.